In today's video, we would be discussing the preparation of trial balance. What we have learned so far is through accounting process, we carry out recording, classifying, and then summarizing of transactions. We record transactions into books of accounts which are called as journals, classify them into books of accounts called as ledgers, and finally we would go in for summarizing with the preparation of final accounts. Now, the reason why we would summarize transactions in a business is because it will help us to know the net outcome of all the transactions the business has carried out. This would be from the beginning of the financial year, which in India's case is from 1st of April until 31st March. So by summarizing the transactions, it will help us to know what is the net outcome of all the transactions the business has carried out. The net outcome will help us to understand the profitability of a business as well as the financial position of a business. Profitability is estimated in terms of a company's revenues and expenses. Financial position is estimated in terms of a firm's assets and liabilities. Now, for us to summarize transactions, we require a statement which is called as trial balance. Trial balance is prepared after classifying transactions at the end of the financial year with the help of ledgers. So with the help of the ledgers, a business would be preparing the trial balance. With the help of trial balance, a business would go in for preparing the final accounts, which comprises of trading account, profit and loss account, and then balance sheet. In a nutshell, the trial balance is a summary of all the ledgers of a business in one single statement. The balances of the different ledger accounts are reported into one single place, and this is what would be used by the accountant to prepare the subsequent statements which are a part of your final accounts. Now, the preparation of trial balance, it is a prerequisite for us to prepare final accounts. The accountant cannot prepare final accounts without preparing trial balance. So the trial balance is a summary of all the ledgers. It reflects the balancing figures which are recorded into the ledgers in a business. Usually, the trial balance is prepared at the end of the financial year. Another thing that we have to remember is while preparing trial balance, the debit balance should be equal to the credit balances. If these are not matching, it means that the accountant has made a mistake while preparing the trial balance. What you're seeing here on the screen is the format of a trial balance. The trial balance has got 3 columns in total: particulars, debit, credit. Particulars reflects the names of the accounts which are recorded. Debit column is used to reflect the debit balances. Credit column is used to reflect the credit balances. A thumb rule that we have to remember over here is assets and expenses usually have debit balances, and these are recorded into the debit column. Liabilities and incomes, these usually have credit balances, and these are reflected into the credit column. But either be the case, at the end of the financial year, the debit balances must tally with the credit balances. So the accountant will write down all the assets and expenses into the debit balance, debit side, and the liabilities and income into the credit side. After writing down all these balances, they would total up the debit column, they would total up the credit column. The totals should match. If the totals are not matching, it simply means the accountant has committed an error and they would have to rectify this. So please remember, trial balance is a summary of all the ledgers in a business, and it is a prerequisite for us to prepare the final accounts. Thank you for watching today's video.